welcome to yet another week analysis. For this week, we're going to be talking about executions. We've been waiting for a pullback. We've been waiting for a confirmation. For like 2 weeks, right? Excuse me. We're waiting for like 2 weeks for a confirmation for a pullback and whatnot, right? So, you know, thankfully we've gotten what we've been looking for, right? We've gotten what we've been looking for, the signal we've been looking for. Like I remember last week I talked about we're waiting for the market to tell you before it reverses, right? It will always tell you, especially with candlestick patterns, right? Now, this is what we're expecting to happen on the Euro USD because obviously we're trading the Euro USD, using the DXY as Confluence and whatnot. But this is what we're expecting. Now, we were having a pullback, a very beautiful pullback, and it took about 2 weeks for this pullback to settle. Now, when the market gets to its area of interest, that's not the time you sell. The time to sell is when you've gotten the bounce. That's when it's time to sell. When you've gotten the bounce. Now, it takes patience. I'm not going to lie to you. It takes patience. It takes a lot of waiting. Sitting on your hands to be able to execute in such a manner. Now, the thing about trading, and I've noticed is this, right? The fact that somebody else might be, hitting profit, TPs all throughout last week or since the past, since the past 2 weeks that we haven't been training, right? And then this week we're able to get an execution and then we execute and maybe 2% for the month, right? I can bet you that the fact that the other person has been exposing themselves to the market, exposing themselves to risk, has or may have equally reduced or taken or wiped out all they've made for the past 1 or 2 weeks. It's something to you. So what I'm trying to say is this, right? Patience helps you not to expose yourself to unnecessary risk. It's something to you. Patience, waiting, sitting on your hands will help you to know what expose yourself to unnecessary risk. And even when you do, even when you expose yourself to risk, even when you are risk on, yeah, it is calculated. You're not executing because you need money. You're not executing because it has gotten to the area of interest. You're executing because you've waited for 2 weeks. You're executing because you've waited for 2 weeks to see a particular thing happen in the market. And until that happens, you're not interested. That's what separates you from others, right? That's what separates us from scalpers and what day traders and whatnot, right? This is the first Euro USD trade for the month, and this is basically the last week of the month. Now we're about to execute this trade on Sunday night. I'll set a limit and I'll sit on my hands, right? We're about to execute this trade and hopefully this last week of April we hit take P and whatnot. It's possible, right? It's possible, right? It's very possible because whenever the markets have done this, you expect it to start pushing. It pushes, right? And you can see with the ceasefire, right? Let's go fundamental a little bit, right? You can see with the ceasefire happening in the Middle East, right? It's indefinite right now. At this point in time, it's basically indefinite, right? So we're expecting the euro, the dollar to keep on dropping. We're expecting the oil to keep on dropping. Oil prices will keep on dropping. I'm not trading. I don't trade oil, but I'm versatile, right? As a technical analyst, you're not just a trader. You're not just a forex trader. You're not just a commodity trader. No, you are a technical analyst. You should be able to use, top-down analysis or however decipher the charts to be able to read other instruments. That's the beauty of technical analysis. Technical analysis, right? You're able to, diversify and look around and see what's going on with other markets. Just looking up the charts. So it is very important to know the proper way. It's not just important to this New York strategy. No, it doesn't work like that. We're not looking to trade New York or London. No, we're looking to trade the markets. It's something to you. We're looking to trade the market. So if you're coming on to the forex industry looking for this New York strategy now, it's not good. It doesn't work like that, right? So anyway, moving forward, right? So the dollar, we're expecting the Euro USD to give us, a push to the downside, or rather to the upside in this case, right? As you can see, I already have my break of counter trend line. Let me make it. Let me show you my thought process. I already have my break of counter trend line, just like so. We've broken this, counter trend line. I don't need this anymore. And now, what I'm expecting is for the market to, open, and then I set a limit around here, around this price, and then I push to the upside, right? This is my second take profit, like so, and then this is gonna be my first take profit, a 2 to 1, right? So this is all I'm expecting. This is all I'm gonna do. My stops come below right here. There's something that my stops come below. Now I use the 4 hour time frame for my stop losses. Don't ask me why. Over time, After you've taken losses for a whole year, you understand why. You see what I'm saying? After you've taken losses for a whole year, you understand why. So I don't use the 1 hour areas of interest. Sorry, the 1 hour structure points, because the 4 hour time frame is obviously what stronger than the what 1 hour time frame. So I expect the 4 hour time frame to maybe you know you know break all of these levels. That's what I expect. So for me to be safe, I like putting my stops underneath the 4 hour level. You know what I'm saying to you? So, and especially after the daily time frame has given us a bullish engulfing, this like these things, they hold the market. Like these things will keep us far away from all the drama going on, right? So that's the thing about having a wide stop loss, because people think to make more money you need to have a tighter stop loss. No, to make more money you need more reward. To make more money you need more capital. Having a tighter stop loss is only going to be detrimental to your portfolio in the long run. You want to make more money, have more reward. You want to make more money. I keep my stops steady. My stop loss, I'm not looking for a 50 pip stop loss. No, my stop loss in this trade is about what 40, 47 pips or 50 pips, right? But that's not the point, right? That's not the point. I'm not looking to execute this trade off of a 50 pip stop loss. It's no, that's stupid to me. My stops are where they should be. Underneath structure levels, underneath run psychologicals. I put my stops always underneath the 50 points. Like for example, right here you can see it's in 1.16648. So it's underneath 50, right? So these are where I put my stop. These are where I put my areas of interest and my stop losses. So we're expecting the Euro US to bounce to give us this push to the upside next week or in the coming days or in the coming weeks. I expect to push to the upside. That's all. Nothing special. There's nothing. I've just been waiting for 2 weeks. For 2 weeks, I've been waiting, right? For 2 weeks, I've waiting. It took a week to go up to give us, a rejection, and it took another week. Now, I did see that the market was going to go down. I knew this. I understood this, right? But would it be wise for me to then sell the pullback? No, it is not going to be wise for me to sell the pullback, because I tell you something about trading, right? The moment you start doing something and it suits you, or it suits the time that you're in, because you need money so you have to execute, and then you take a counter trend trade, and then you hit TP. Trust me, you're gonna do it again, and you do it again, and you keep doing it again. Even when you take stops, even when you hit stops, you're gonna like it's something like it's going to be like that's the thing. You need to be able to have a structure. You need to be able to say, no, this is the plan, and I'm going to follow it. If a counter trend trade was in my plan, or it was in my trading plan, I would take it, right? But it is not in our trading plan, and this is something that our mentors have been drilling in our heads. We do not trade counter. We do not trade the pullbacks. Even though the pullbacks are coming off of the daily time frame, the weekly time frame, right? The higher time frames, and we're getting the bounce off of weekly time frame area of interest, because these levels right here, they're from the weekly time frame. So I buy off of weekly time frame area of interest. This gives me a higher ground. This gives me a better move in the market, a better structure to trade off of, instead of trading off of the 15-minute time frame area of interest. These levels are going to get broken off. It's something to you, but the weekly time frame, the daily time frame is obviously not going to disrespect the weekly time frame. The only thing that's going to disrespect the weekly time frame is the monthly time frame. And in this case, we do not trade the monthly time frame, but rather we are trading in a specific direction. Now, Euro USD in this case is bullish, because we are headed to a monthly time frame area of interest that is at this level right here. This is where we are headed. Right, this is where we're headed. But we also have to put into consideration that the market could also turn around at any time. It's very important, because at the end of the day, the structure is bearish, but we are headed to a specific level that puts us in a range. So now we're basically trading a ranging market. We're basically coming up, coming down, coming up, and coming down, just like so, right? This is basically a ranging market, right? So this is what we are trading right now on Euro USD. Look for buys, nothing more, you know there's nothing more to do. Like there's nothing to add to it. There's nothing special I have to add to it. There's nothing special I could say right now. Nothing special. There's no secrets, indicator or whatnot. No. I'm going to buy, and I'm going to execute on a Sunday night, place a limit, and I go to bed. Simple as that. This is what we are expecting on the euro dollar. If we take our Fibonacci from a swing low to a swing high, just like so, we can see that we are just right on the money, right? The golden zone. You see, 60% is right there. We're right on the money, just like so, right? So I have nothing special to add. I have nothing special to say that I haven't said already before in the past couple of videos, right? So for Euro USD, this is the plot. I hope that everybody follows their training plan. That's just it. Follow your training plan, you'll be all right. In the long run, you're going to be all right. I'm not saying you're not going to take losses. In the long run, you're going to be all right. Over time, you're going to be all right. So have a great week. Ciao, ciao.